I'm about to share with you one of the most important concepts when it comes to market structure and bias. This could be one of the most important lessons that you learn as a trader, and I'm going to give it to you right now for free. As you might know, I take most of my trades based around the 15-minute opening range breakout. Right here, you can see me charting out the first 15-minute candle of market open during the New York AM session. So in this example, you can see in the first 30 minutes of market open, we don't break out of the opening range. But finally up here, we see an opening range breakout to the upside. So what most orb traders are doing at this point is waiting for that break above, and then they're taking their long position, trying to target buy-side liquidity. And while you can see that move did eventually happen, it did not offer enough reward, and it was not in alignment with our overall market structure for me to trust taking these longs in this chop. And you might be thinking, well, we had a very bullish structure there. Why would you not long? Well, when I actually break down this trade, I see that price was trading into an hourly imbalance, and it was also testing VWAP for a move back down because we had external sell side of this range resting below with some higher time frame bullish imbalances. At this point, price is still stuck in a sideways consolidation range on the higher time frame, so we need to see a full-on sweep of these lows before seeing the long step in and break through the top of the range. So notice how up here, price rejects that hourly fair value gap super aggressively. The first thing you'd be looking for is a short from up here, but most people would have missed out on the short because of how aggressive it is. So that's when we just wait for the orb breakout to the downside. So here's where I would start looking for my shorts. I'd look for my first 1 minute fair value gap after that break of the orb low, and I'm waiting for a retest of that level to take shorts to target sell side. We had some internal sell side liquidity below us, so that would have been a really good first target for TP, but ultimately we want to see this external sell side get taken. So let's see how this first trade would have played out. We would have had our entry right there, and price just kind of starts chopping, but at least we had our first TP, and now my stop loss is at break even. So while price was looking good, it goes into chop and eventually just stops me out at break even after taking a first TP. And this is where most traders would give up on the shorts. But what I do is I use my Fibonacci retracement tool from the low of the 15-minute orb up to the high of the 15-minute orb, and I'm just looking for a 50% retracement into that area because we still have some unfinished business left below us at that external low. So now we've came up to the 50%, we're right at VWAP again, we've taken out buy-side liquidity, and we've created a 1 minute bullish for value gap. So once we inverse this for value gap back down, I'm looking for the shorts to finally step back in, and that's where I want to actually target my entry, is from here, keeping my stop above, and finally seeing price come all the way back down to these lows, but ultimately down to our external lows down here. So let's see how this one now plays out. We have a quick inverse and price retaps into that IFEG and holds that structure super well. So at this point, I probably would take my first TP around these internal lows. And just like that, you can see price ran all the way down to our external liquidity and finally finished out the liquidity sweep.